You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for the old OB, a.k.a. the Option Block, a.k.a. our bi-weekly source for all things options related, a.k.a. the kickoff show here for yet another week on the Options Insider Radio Network. Going to be a fun week coming up, so if you haven't joined us yet on the pro or the plus side, you may want to consider it, especially on the pro side this week. Got a double pro Q&A week coming up. We got Ewan Sinclair joining us tomorrow and Simon Ho, the Spike's father, as well. So we're going to have a double vol-centric pro Q&A week out there. Probably good timing on that front. We got a little bit of vol creeping in to the markets out there again today. So if you have one of the many who have joined us on the pro side, welcome. You're going to have a great week. If not, check it out. TheOptionSider.pro is the place to go. That's the place to learn about all this good stuff. Of course, you can join us live for the pro Q&As. Ask your questions. You can listen to them after the fact as well on the exclusive podcast feed, a whole bunch of other cool stuff. And of course, wherever you listen live after the fact, on demand in that donkey cart in Estonia, wherever you're getting the show, keep rating and reviewing. Really just help all the new folks discover the show these days. We do love to hear from all you guys and gals out there. And before we see who we're hearing from on the old show today, it is that time of the week, listeners. Yes, the time to kick off our broadcast week in fun, nay, hilarious fashion. This is our 80s Wrestlers, guess that 80s Wrestlers entrance theme segment. Easier for me to say today, but I had a special request from our producer before the show to change it up a little bit. So for probably one time only, we're going to go outside the 80s very briefly. Not even into the 90s, into the 2000s, to the modern era, to a wrestler who is kind of synonymous in many ways with that era, and apparently made a big return, triumphant return over the weekend. So he's all the buzz of social media. So we had a special request to do this wrestler. So can you guess that actually 2000s to modern era wrestlers entrance music? All right, keeps going for a while. It's an infectious one, listeners. I apologize. That one's going to stick in your ears for a while. I have a feeling one of our guests may know this one. Perhaps two. We shall see. One of our co-hosts here. Let's go out. He is our reigning, defending 80s Wrestlers champion. Let's see if he can also name that tune from a little bit closer to the modern era. Mr. Uncle Mike TOSAW from St. Charles Wealth Management. A, welcome back to the program. And B, can you name that modern / 2000s era wrestler, sir?
Well, be here as always. In terms of the tune, if you would have just given the tune, I would not have been able to have named it. But just because of the hint and me being the news person with which I am, I'm going to go with John Cena.
Well done, sir. Yes, making a triumphant return over the weekend. So the internet abuzz with the return of one Jonathan Cena. So yes, that was my special request for our producer out there. Hope you enjoyed that one. Looks like our chat got it. Yeah, John Cena, as the meme kids call him now, John China. Oh, is that a thing? I did not know that. I know he was himself a meme for quite a while. He was kind of like a Rick roll where, something would be happening. You'd watch a video on the internet and all of a sudden, bam, and it was John Cena would just explode into the video. So he became a meme for a while in and of himself. I haven't heard the John. Oh, that's right, because he did that. Didn't he do an apology or something along those lines? Yes, I think I vaguely recall what you're talking about. And now I'm going to turn that dial back down to the south, to a region we haven't been to in a while, deep in the heart of Texas. I believe it's like 127 degrees down there or something like that, where we are joined by the roasted meatball, Mr. Mark Sebastian from OptionPit.com, back from his sojourns hither and yon, including a sojourn to this here Chicago. Mr. Meatball, welcome back to the program. A and B, do you have any enduring memories or thoughts of one Jonathan Cena?
Well, one, I'm not in Texas. I'm in Detroit. So not
Oh, I turned the wrong dial. I'm sorry. Let me turn that dial to the north and to the east, sir.
Yeah. No, that's why it was coming in a little funny there. Last place in beautiful Rochester Hills, Michigan, and the sleepy suburbs of Detroit. Enjoying a beautiful sunny day here and weather that is not 300 degrees. And yeah, I actually did know that as soon as the song played, that Jonathan China was the lead in music. For a second, I thought it might be Rey Mysterio, but then I realized as soon as I heard the ding, I was like, oh yeah, it's John Cena. So that'll be a fun one. He was always the baby face that everyone loved to boo. Let's see if that continues now.
Yeah, apparently he said he came back and he wasn't getting booed and he didn't know what to do with it. People were cheering for him. So he was surprised by that. But yeah, interesting stuff. I apologize for putting that earworm in your ears, listeners. Blame our producer as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show we break down what the heck is trading. And, we got a little bit of something here on the screen coming into the start of the show. To put it mildly, a color we were flirting with a lot last week. There were moments of red. Then it kind of would fight back, then would sell off a little bit again. But it seemed like it was always struggling to get into the green. A few times it would make it happen over the course of the week. But today, now the red is back in full effect. All the major indices off well north of 1%. NASDAQ actually the laggard today, off about 1.3%. The S&P off, closing in on 1.9, almost 2%. And the Dow off almost 2.5%, about 2.4%. But Dow is making the headlines out there. Everyone loves, of course, the point numbers and the point totals in Dow land because they just sound more impressive. So coming into this, it was already off 700 points. Now it's 827. At 700, it was heading for the worst decline of the year. I think we already are past that now. Yeah, because the worst we saw for the Dow for the year was 777 points. That was about 2.2%. That was back in late January, or a little bit more than 2% was in late January. So we are already exceeding that now with about 2.4%. So we're in some interesting territory. All that said, all this dire headlines, all this hand wringing, oh my God, the sky is falling. You're still at nearly 42.5 in the S&P 500. Remember back, wasn't that long ago, the election special, we were floating around 3,300 in the S&P, listeners. So just keep that in mind for a little bit of perspective as we're seeing, the headlines of, oil interests and oil prices starting to fall. We're seeing COVID concerns spreading out there. Again, we're seeing some mask mandates get reinstalled, concerns over yields around the globe and everything else, all that starting to pile in. Just keep that in mind. We're still north of 4,200 in the S&P. So since he didn't get a chance to guess it, but he knew it. And since he hasn't been on in a while, let's go out to the land of the greasiest of meatballs, Mr. Meatball. So it looks like our chat is excited to have you back. They're saying welcome back to Meatball. So there you go. The folks missed you.
I miss them. This is one of my highlights. And of course, I would pick a day when the S&P is down to do that. We've been down. I think we touched down 2% on the lows, and we're seeing a little bit of all here. The VIX blowing up, taking a really strong move higher, some real kind of jitters in the market here. And I'm really interested to see what this close looks like. Friday's close was really ugly. That was a tip off. And today, if we get an ugly close, it could be a tough week. I mean, there's really not a lot of places to hide right now. Even the love names are getting pounded. Apple well off its high of touching 150. Amazon off. All the mega caps that have kind of been holding up this market are selling off along with the oil names, and oil is really, I think, the big story here. You want to talk COVID, great. I think that short term, the OPEC deal that took place over the weekend is pretty, in terms of kind of a breakup of OPEC, and everyone turned on the spigots. I actually think this ends up being somewhat bullish for oil, and we get maybe another day of this, and we could see oil make another run back at $70. Some of the energy names have been absolutely destroyed. XLE is getting absolutely pummeled. It's getting near 6-month lows. And financials don't look so hot today either, as interest rates obviously tank and bonds explode because we have all this debt that everyone's worried about. So better buy bonds. And then the COVID story, I can't decide if it's a real story or not, but they're definitely throwing that in with the headline. But this really seems like it's very much energy and oil driven today, more than it is an overall COVID thing, which is why we're seeing XLE get so absolutely hammered.
I got so excited to get into the start of the show and have some actual meat to sink our teeth into today. I forgot to do the vol rundown out there. So yeah, coming at the start of the show time, we had VIX at about a 24 even. That puts it up over 7 handles, 7.25 points from where we were on Thursday. Listeners, we had VVIX, which is the vol of vol, getting frothy, 143. Listeners, we always talk about when things get crazy, it reverts back up to the 120 level. And was hanging around there for a while last week. Now we're 23 points beyond that, 143 coming into today's show. Give you some idea of where the heck we're hanging out. VXX just threatening to tick, 34.9, just threatening to tick the 35 level out there. Man, that's a level we have not seen in quite some time, since right after the split. I think it sold off instantly right after the split. So you're talking up nearly 6 points, 5.75 points in VXX, listeners. So I guess all of you out there who were hand wringing saying, man, I missed my chance to get in on some of that downside. Well, it's obliging you. It's doing a little bit of the old reset for you. The nice day today. I finally got those VIX call flies that I kind of worked and missed because I was busy doing shows for you folks last couple weeks ago, listeners. They got off today, a nice level. So that was nice to unload those. And Vol Q 21 coming into pretty much right now. So that's up about 2.5 points from where it was this time on Thursday. So spoiler alert, listeners, Vol is firmer. Vol is frothier than it was on our last show. Let's go out to the land of St. Charles. Uncle Mike, not exactly an Uncle Mike type of day. What is lighting up your tape out there, sir? And also congratulations on you're getting Jonathan Sana correct, sir.
Always happy to start the week off with a victory on the 80s wrestling theme song game. So I think today's just a sell-off, meaning that we are up 13% on the year in the S&P 500. We had new all-time highs as recent as last week, and big rallies begot big sell-offs. So in other words, if we're down 2% on the day, going from positive 15% or wherever we were, 14 and some change, wherever we were, to down roughly 13% as a gain on the year when we're in towards the later part of July. This is still a strong market. There's nothing indicating that this is going to be a weak market based on today. I agree with Mark in terms of how this could be a good deal for the OPEC deal that came about. in terms of bond yields going much lower, I think that's an overreaction to what's happening in the stock world. And what's happening in the stock world is that there's a lot of fear in the marketplace right now, as evidenced by a VIX being going up north of the 23 handle and being north of almost touching 25 at one point today. And so I think when you have things like that happening, I personally think this is just a little bit of an overreaction in the bond world. In the stock world, where I think we are is that we've been about at similar levels throughout. We've been a little bit. We're at closer to the lows right now, but we have not just had the jailbreak sell-off as of yet, to where it's just consistently going down, 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 down. We've actually had some upticks in this market. And so what I mean by that is that, yes, we're obviously way down on the day. I'm not trying to skate around that point, but we are getting some signs of life as evidenced by the rally that we had from roughly 9:15 Chicago time to 11 Chicago time, and a little bit of a rally that we've had over the last half hour. It's not a major rally by any means, 10 points. But my point is that there are buyers in there, or at worst, there are sellers taking profits. So where I'm going with this is that I think that there's a lot of fear in the market ahead of earnings that are coming out this week. Combine that with the fact that we have a major discrepancy in the marketplace, in that the roughly 5 to 10 companies have been driving this market higher over the course of the last couple months, and the rest of the stocks have not been doing so hot. And so when you don't get the big rallies in the names, such as the Apples and the Amazons and whatnot, this is going to happen. So I think we're at quite the crossroads this week in the marketplace, in that earnings could dictate a second rally higher, or this could just simply be the beginning of a little bit of a pullback. I'm personally being very cautious right now. I tweeted out early this morning, I was short a put spread, a 1 month put spread going into this weekend. It's still very far out of the money. And I bought my garbage put spread over the weekend that I've been talking a lot about over the course of the last few months. And so I did actually, when we had a little bit of a rally a couple hours ago, I actually bought back the short leg of my garbage put spread for a penny, or roughly a penny, for what I was doing on it. And so if we do have a 10% downturn, I'm good for today. But if towards the end of the day today, what I am planning on doing is rolling down my short put spread, just because of the fact that it's still pretty far out of the money, but I don't want to be rolling down or rolling out or closing it when it's too late. Oftentimes a mistake that traders make is that they'll wait till it's too late. I'm about at that point right now, but I'm going to hold on for another hour or two because of the fact that we do have, if we do have another 100 points of downward rally, it would kind of be a dogs and cats are living together type of day, because I would be making money in a bearish market if such a thing happened. So, but with that, I'm probably just going to, the couple of pennies that long put that I have that expires today is on. I'm just going to put that in the garbage column for today, and I'm fine with that. But my thought is that I think you do need to take some caution at this point in time with where you're at. Now, on the long premium that I have on my long butterfly, I'm not doing anything with that. And that one really did not get beat up too badly today. I might close out some of the body of it. I have a long bullish butterfly. I might close out the short call spread side of it, but I doubt I will. That's going to kind of act as my opportunity in case this market does climb up to the heavens, if you will. So where I'm going with today, I think that this is just a little bit of a pullback with fear ahead of earnings. I don't think that the COVID story is a story personally, just because of the fact that if we weren't afraid of, if the market was able to do what it did with the original COVID, I don't think it's a story. It could become one, but I still think it's too early for that to become a story based upon today. So to sum up my long ramble, today's just a pullback.
Just a pullback to the perma bull. That is Uncle Mike. Let's see what it is to the markets out there. And spoiler alert, there's some paper hitting the tape out there today, listeners. Let's start in the land of the major indices and VIX land first. VIX threatening 1 million contracts, 957,000 contracts as of a few minutes ago. The ADV out there has been trending in the other direction. It dropped again even since our last show. It got down to 416,000, threatening to break the 400K level. I got a feeling that's going to change after today. SPY blowing the doors off as well, 4.6 million contracts on the tape. As of a few minutes ago, the ADV just a tick under 4, about 3.92 million. The S already north of 1 million as well, 1.3 million. Those are impressive levels for the S. The ADV is also getting impressive out there, 1.4 million, threatening 1.5 million contracts on ADV in the S. That's nothing to sneeze at. The Q is already at 1.25 million. The ADV is almost 1.4 million out there. And the small caps also on fire today as well, 1.05 million for the IWM. The ADV is 650,000, so way north of that as well. In terms of the single names, that's where a lot of the action has been out there of late. Let's see if that continues to be the case today. Cost you nearly 250,000 contracts to break into the top 10 today. That gets us to our friends across the street here. Boeing, 246,000 contracts for them at number 10. Number 9, Softy back in there as well, 249,000 contracts for them. Number 8, the symbol twin to our friends across the street. We got Bank of America at 256,000. So we're still at number 8, we're still hovering around 250,000 contracts. Number 7, NVIDIA, 273,000 contracts. Number 6, it's NEO, 285,000. Number 5, now we're moving on up here, all the way out to CCL. No, not Credence Clearwater. That'd be cool, but it is Carnival Corp. We've been talking about them on Options Oddities of late. Got a feeling might be talking about them perhaps a little bit later again today. 396,000 contracts for them. Number 4, it's Ford. Ford on the rampage in the wrong direction, trading a little bit south, I do believe, today. Let's pull it up, see where it is right now. 13 and about a quarter, off nearly 40 cents, or about 3%. So well shy of where it was not too long ago. Remember everyone out there talking again about on our Options Oddities program, folks loading up on the 17 halves, 19s, 18 halves, and even 20 strike out there. And Ford, spoiler alert, all of those not looking so bueno right now. Ford, number 4, 453,000 contracts on the tape for Ford. That's the most paper we've seen out there for them in some time. Number 3, back to the meme names. It's AMC. Though despite all this madness out there, AMC still holding on to the number 3 spot with 496,000 contracts. Number 2, it's Tesla, 548,000 contracts. Let's see how our old friend Tesla is holding up in this maelstrom, off over a little over 1%. So that's kind of a rounding error for Tesla out there. And then our old friend, number 1, the big dog, it's Apple, 1.36 million contracts. They're off about 3% today. So they're feeling a little bit more of that downside. Remember, as Mark alluded to, they did just touch a new all-time high. So shedding some of that today and putting up some numbers, 1.36 million contracts. Let's see really quickly where the most biased paper is today. Actually, a lot of egalitarian paper out there, very close splits between calls and puts, which is fairly rare. AMC 54.46, Tesla 56.44. I mean, that's something you don't normally see in the top 10. Actually, Ford, this is one of the first times in a long time we've seen a name be actually put dominated in our top 10. Ford just barely making it, 52% of that paper coming on the put side of the ledger. I can't remember the last time we said that for a top 10 single name here. Let's look really quickly on the call side. It looks like it's NVIDIA with about 65%. That's nothing. That's usually the floor. Actually, I take it back. Apple has 69%. But still, that's usually, the floor for what we're talking about here. Usually it's well north of that for call bias. So seeing some interesting stuff afoot out there in the market today. Also, in case you want to take a break from all this macro madness out here, we do have some single name action on the docket this week. Yeah, earnings are back. They're hot and heavy. Big names popping off. We got Beamer today. We got Ally Invest, our friends over there tomorrow. Netflix, United Airlines, and Chipotle all tomorrow. Wednesday, we got Coke and Johnson & Johnson. Thursday, AT&T, American Airlines, Southwest Airlines, Crocs, for all you lovers of rubber shoes, Intel, Snap, and Twitter. Friday, American Express and Honeywell. We've got some move results hitting the tape right now for us. Earnings move and earnings season report. All that coming hot and heavy right off the presses here right before the start of the show. Let's see what we got here. Beamer after the bell today. They were at $138.90 as of this report. They were pricing in $5.92. In the past, they moved exactly $7. That's intriguing and also a little bit light. But again, past this prologue, that's probably the right play to make. Netflix, formerly known as the Widowmaker, who knows if that's still the case out there these days, at about a 530.31 going into this report. They're popping off on the 20th. So tomorrow after the bell, they were at 32.68 is what they were pricing in. In the past, they've moved 32.13. So keeping things pretty much in line out there in Netflix land. United Airlines also tomorrow after the bell. 46.01 is where they were as of this report. They were pricing in about $2.50, and in the past they've moved about $2.50. I think I'm starting to see a bit of a pattern here. J&J on the 21st after the bell, they were at 168.10 going into this into this report. They were pricing in $371, and in the past they've moved $294. So a little bit of extra juice out there. Maybe you could argue that's warranted. There's been some headlines in J&J's area of late, not all of them good. So perhaps some of that leading to some of that extra vol juice creeping in there. American Airlines on the 22nd before the bell, they're at 19.79. They were pricing in $1.25. In the past, they've moved pretty much $1. So a little bit extra juice out there in American Airlines as well. That's not the only airline on the docket. The 22nd, we've got good old Love, a.k.a. Southwest Airlines, almost $50 even as of this report. They were pricing in $2.29. In the past, they moved $1.60. So more juice in Southwest as well. Interesting. Intel, my old stomping grounds, at about $55 even. They're on the 22nd after the bell as well. They're pricing in $3.19. In the past, they've moved $3.91. So a lot less juice in Intel land. That's interesting. Snap, haven't talked about Snap in forever. July 22nd, they are as well. $59.31 is where they were trading as of this report. They were pricing in $6.89. In the past, they moved $8.51. So trimming a lot of vol off of that branch there in Snap. And let's go to Twitter as well. Why not? They're also on the 22nd after the bell. 66 and about a half is where they were. They were pricing in $6.84. In the past, they moved nearly $8. So taking a lot of juice out of Twitter as well. Interesting. Again, it's hard to argue given what we've seen out there that is not the right play. Again, we've only had a couple of things reported so far, but so far we're hovering there at a whopping 73% for this season. But again, the season is young, as is this show, but we got to keep on rolling into our next segment. It is time to unleash the eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, time to get weird, time to get wild, time for the Odd Block. Mr. Meatball, I know it has been some time. Do you recall how this part of the show works, sir? Can you handle it?
Yes, I believe you're going to read off some order flow, and I'm going to make sense of it for the world.
We have also added a bit of a dancing segment to this as well, so feel free to contribute to that as well. It's a visual component that our listeners have come to appreciate.
Well,
so.
I love dancing. I love busting a move. And yeah, there's been a lot of orders today. So I may have one or two I can chime in with when we're done here too.
Hey, the more the merrier. The more eyes of Sauron we have lurking out there scanning the markets, the better. Let's kick it off in Vodafone. If you're one of our pro members, you've been listening to Options Oddities, you know we've been talking about Vodafone, I think as recently as our last episode. If you want to check that out, listeners, you know to go. TheOptionsInsider.com/pro is the place to go. Today, Vodafone, ticker symbol VOD, V-O-D. They're not having the best day, off about 66 cents or a little over 4%. They haven't had, they've had an interesting year. Let me put it that way. A year ago, they were trading actually higher than they are right now. So net on the year now, they're actually off. Actually, I take that back. They're off 66 cents or 4% on the year. Today, they're off nearly 4% as well, 65 cents. So very similar levels there. But yeah, it's been an interesting year. They just kind of ticked negative for the year. A year ago, they were 16.31. They sold off, looks like in the middle of October, down to about 13.14. Then they rebounded and had a nice kind of upward swing. It wasn't all up. They had some chop there, but they ended up topping out in May at about 20.36. So they had a nice little rebound there. And then ever since May, it's kind of been just a series of red on the screen. They sold off pretty hard. On the 17th to the 18th, they went from 20.25 to about 18.25. So pretty much a pretty aggressive sell-off there, and it's kind of been downward ever since to where we are right now, kind of wiping out the year for Vodafone. But it seems like, Mr. Meatball, it seems like someone perhaps thinks that this drubbing in Vodafone is a wee bit overdone because they're coming out and saying, you know what? I'll take some of that upside you're giving me at low levels, and I will buy it all to the tune of the SEP 16. So these are slightly out of the money calls here in September, going up 19,000 times this morning. Pretty much at the offer. Actually, a penny off the offer. They got a little bit better execution for 19,000. That's impressive out there. So 19,000, someone gobbling is up for 56 cents on the open here. Vodafone was pretty much exactly where it is right now here. So that's pretty much the exact same level for the stock. If you're wondering, let's see, vol-wise, that's about a 28 vol. So given some of the premium buys we've seen out there of late, this one is by no means the most outlandish. People are paying regular triple-digit vol levels out there for some of the crazy trades we profiled. So a 28 vol seems comparatively level-headed and reasonable. There are no earnings in this cycle. The next earnings for Vodafone are on November 16th. So, Mr. Meatball, looks like we got some old school, old-fashioned call love here for Vodafone. What do you think about this one? I think this is a bridge too far, or are you maybe liking this one?
Yeah, Vodafone's been busy today, and it's had some strange paper over the last month or so. Traders will remember that we've also talked about the October 18 calls, I believe. They are a whale of an open strike right now. There's about 119,000 of those open. We also see about 40,000 of the SEP 17s trading today. So there's just huge volume today and big upside volume here in October. I like it as a whole. I was looking at the October 17 calls. They're about 40 cents. Gives you an extra month. I like those as a play, and piggybacking along with our big October trader. I don't know if it's the same guy or not, but we definitely are seeing some serious counter trend call activity in Vodafone. The October is a couple weeks ago, and then today these September calls.
So yeah, you're right. The options trend has been to kind of fade this move. We'll see if that maybe continues a little bit. Speaking of fading moves here, or perhaps they were fading, it seems like maybe not. That's some of the paper we saw actually on Friday for, again, this is another name that popped up in our options oddities as well on Friday. So kind of a bit of a twofer. And now we're kind of getting back into this one. Again, going to a different side of the fence this time. Well, let's kick it off. CCL, we just talked about them in our top 10 most active listeners. This is, of course, Carnival Corp. They're trading right now. It's like about 19 3/4. Now, it's an interesting kind of story for them. On the year, they're actually up still about 31% or almost $5. Excuse me. But if you narrow that frame of reference, because a year ago they were trading pretty much exactly 15 even, and they had a nice rally, but of course, that rally kind of petered out in June at about 31.5. So they were markedly higher than they are right now. So it's kind of been a tale of two tapes here for Carnival, leading into that June high and then kind of coming out of it. Over the past just week or so, they're off about 16%. Over the past month, they're off about 32%. So it's kind of been a bit of a sordid tale over the course of the past couple of months out here from Carnival, as they've pretty much been cut in half from those very lofty highs. I guess some folks thought, here we go. This was almost the poster child for the reopening trade, right, listeners? It was, hey, the cruises are coming back. Let's load up on this bad boy. Here we go. And then some test cruises came back. People got COVID. Lockdowns started happening again. And apparently folks not liking the prospects for Carnival because it's back not that far away from where it was back a year ago. So all that run up, all that rally, all that, reopening talk we heard about Carnival, perhaps not exactly going the way intended. And now it's like someone coming in with some very near-term concerns about the future outlook for this name, perhaps thinking that the sell-off has not abated. It still has more room to go, because someone this morning was coming in and just putting up some work here on the July 18 puts expiring on the 30th. So these are out there in the weeklies, listeners. First off, we saw 12,346 of these going up. Paper gobbling them up through the offer. They were offered at 38 cents. We'll take all we got for 40 cents. And then looks like they came back about an hour later and got another 12,000. This time managed to get them for 37 cents. They're still both around a 75 vol level, pretty close to it. Let's see. The stock was actually higher the second time, about 20 cents higher. That's why they got a better price. So this is just a lot of size downside paper here. There are earnings coming up, but not actually. Looks like the next earnings announcement for this name is in September. So this is Not an earnings play, listeners. This is just straightforward. Hey, I think there's a heck of a lot more downside to go here. And they're willing to pay a 73 vol to get in on the 18 strike, which is nearly $2 away from where we are right now. So Mr. Meatball, I apologize. Mr. Meatball, sir, this is kind of the contrary trade to what we've been seeing for a long time, right? The reopening, all the carnival love. Here we go. We're back in business. And now someone's saying, the 18 strike, look out below in carnival, sir. What say you on these puts, sir?
Yeah, it's been kind of a bloodbath for CCL, RCL, NCLH, the airlines. Any of the travel names have just been absolutely obliterated. And this is a bet on that pattern continuing. At some point, you got to ask yourself, when do these start to look interesting? This guy clearly says closer to 15 than where we are now. So, if you're looking for that reopen trade to blow off the top, this is not encouraging of that overall trade. I've just been absolutely floored by the move in these names as they've just been, beaten with the ugly stick over and over and over again over the last 2 to 3 weeks. So when will the bloodshed will end? Just the question is when. And this guy's saying not before Friday. Not before earnings.
Not in July. Not this month. You're not looking good.
Not in July. If you're looking for that turnaround. So that's what we're seeing here. Yes, absolutely overtly bearish.
Yeah, this is an interesting one. Again, it's kind of contrary to some of the other paper we were just profiling, going a little bit longer term. Some folks may be playing a longer term rebound in Carnival Cruise Lines, but this person saying, yeah, it's going to get a lot worse before it gets better. What are your thoughts on all this madness in Carnival, listeners? It's moving to downside. We got upside trading. We got now size downside trading here. What are your thoughts on this one? Is this kind of overblown? Did people overdo it to begin with all the reopening love, and now we're back to a more realistic level? Or you think this is kind of like our trader here is saying, look out below here. What if we go back below where we were a year ago? That's an interesting sign for a name that seemed like it had been showing a little bit of rebound action, or a lot of rebound action, really. Let's wrap it up here with one of your compatriots, the Rock Lobster's favorite styles of trade. Let's see how this one looks out. We're going out to American Eagle Outfitters, ticker symbol AEO. I'm talking about this one in a little bit as well. Let's see what they've been up to over the course of the past year. Trading right now about 33.60. Had a nice little run this year, up 235%, or about $23.50. A year ago, they were trading exactly $10. So a nice little pop for American Eagle. Folks going back out, buying clothes, doing things they normally do again. So that's kind of been a nice run. Of course, not quite as pronounced as our friends out there. Actually, looks like they're kind of still maintaining a level. They topped out at about $39. So they have sold off a bit over the course. That was back, it looks like, in April 23rd. So kind of like not nowhere near as aggressive as Carnival, but they have sold off a bit over the course of the past couple of months. So maybe they have seen a bit of their near-term apex for the reopening, but let's see what our Eye of Sauron has to say about that. It looks like someone coming in saying, you know what? If this thing keeps selling off, I shall draw a line in the sand here and say this far, no farther. In this case, it is the 26 strike. Someone coming in and blasting away at the 26 strike puts 10,410 times for 20 cents. They actually got a penny better than the bid. They were bid for 19 cents. They were 19 cents at 42. Interesting market. The stock was actually a little bit south of where it is. It was at 32.87 when these went up. So that 20 cent level's not looking bad right now. Let's see. That is, if you're wondering, about a 58 volatility. There are earnings coming up in this name. They are after this option expires, though. They're in August, but they're on August 25th. So expiration is on the 20th. So no joy there. They're not getting some earnings juice. But then again, maybe you don't want to draw that. We talked about it before. Maybe you want to ride your short put strike through the earnings event if you can avoid it. So this guy's getting his 20 cents maybe and getting the heck out of Dodge before the earnings event. Mr. Meatball, what are your thoughts on your compatriot's favorite strategy, the line in the sand put, this time in American Eagle Outfitters, sir?
Well, Mark, I would think that, knowing that most of your styles are from this store, that you would have a stronger opinion than me.
I'm more of an Abercrombie man. I love my tween fashion.
I know you love Abercrombie. You love those tight-fitting shirts. You miss the days of the flannel, though, from high school. Admit it. But
I
what
love
I'll
my
say is
grunge.
that this absolutely looks like a line in the sand, and not a huge yield, but it makes a lot of sense to me. Especially if you're looking to go long. Retail has had a really nice recovery. Malls are busy, so this one could make some sense.
And you know who always makes sense? It's Uncle Mike. So it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. It is Monday. It is time for our weekly dose of strategery. But before we get to that, Uncle Mike, I know you got some burning thoughts on a name we were just talking about, Ford. Ford putting up some paper today, over 400,000 contracts. Also turning to the dark side, threatening that 13 handle again. What are your thoughts on Ford, sir?
Okay, so I had an interesting experience with Ford today. So a friend of mine, he's not a trader, he's not in the business or anything like that. And so he came up and asked me, he's like, okay, I'm in a weird situation right now. I'm like, well, what's your situation? Thinking he's going to talk about maybe something's going on with his mortgage or his checking account, his brokerage account, whatever the case may be. He's like, it's with my car. And so I'm like, well, what's going on with your car? So he has a used Ford. He bought it for $36,000. I believe he said 3 years ago. He's put about 30,000 miles on it the last 3 years. And the dealer called him and offered to buy it back from him for $3,000 more than what he paid for it 3 years ago. Now, at first I was thinking, well, that's kind of weird, but it's actually true. So right now, I guess there's really quite the demand on used cars. So in the 20 years I've been in this business, I've never heard of anything like this, to where he was thinking he wants to sell his car, then maybe lease for a year or two, and then when the used car market comes down, he's thinking about buying another one. So today I actually got to advise somebody on taking profits on their used car, rolling it into a lease, and then holding off for a pullback to where he can buy again. Right now, I guess with the chip shortage that exists right at this stage, that's actually happening. So kind of a crazy time right now in the world of Ford, to say the least. That being said, I want to talk to you today about what you can do in a day like today if you're looking to sell a put. First off, you can sell a put. If you're thinking about selling a put today and you still like to hold the stock long term, today's a phenomenal day to sell a put. I tweeted about a little bit earlier today at Mike TOSAW, and I think that if you're okay taking on a little bit more volatility, you're going to get some nice premium today, or you can get a nice cushion, one of the two. But let's say you're a little bit concerned and you still want to get into something, but you really are concerned with just selling a put at this point. I actually put this trade on today in something. I don't think I'm going to get filled with it, but I actually did put it on. So let's say that XYZ stock, it's dipped a bunch, or maybe it's come up a little bit, whatever the case may be, but you don't feel quite comfortable selling a put for whatever reason, but you still kind of want to be a part of it. So XYZ stock will put at $50 a share, what I always like to put XYZ stock at. And normally you'd consider maybe buying it if it did go down to, say, the 43, 44 level, but you just are a little bit concerned and it's a little bit too frothy for you right now. And so one thing you consider doing is a ratio spread. Step one, you can buy, not sell, but buy one 45 put option. And we'll price that at $1. These prices are totally weird and made up, but I want to make it as simple as possible for purpose of illustration. The second thing you can do is you can sell two, not one, but two 40 puts for, you can sell them for, I will make them $2 and, excuse me, you can actually sell them for 55 cents. So let me start over with this one. You can buy a 45 put for $1 and sell two 40 puts for 55 cents each. What that'll do is that'll give you a 10-cent credit. 55 cents plus 55 cents is $1.10. That's the credit you're getting. You're using $1 to buy the 45 put. I'm like, what the heck are you trying to do with this trade? Well, first off, let's say that the stock stays above 45 between now and expiration. You're going to get a 10-cent credit for doing this trade, assuming you hold it till expiration. Now, let's say that the stock goes higher, or anything above 45, that 10 cents is yours to keep now, always, and forever. 10 cents on $45 worth of risk. Holy cow, how can you possibly not be excited? I'm saying that sarcastically, by the way. With that, if you are looking for a little bit of a pullback in the stock and you're fine owning it, what's exciting about this trade is that the only way that you can lose money based on how I illustrated this trade is if the stock goes below $35, or actually $34.90. The reason is that if the stock is below 45, between 45 and 40, you're making a profit on anything bearish, meaning that put that you bought, that's free because those 40 puts are going to expire worthless, let's say in theory, and you essentially just have a free put option. Now, let's say that it does go below 40. That 45 put has to be worth at least $5 because of the intrinsic value in it. Because of that, the 1-by-1 45-40 put spread will be worth $5, anything below 40. And your obligation is at the 40 level for that extra put that you sold. So essentially at that point, it's like selling a 40 put for $5 for a stock that you were looking to get into anyway. So with that, I usually like to do this at close to even money, sometimes a little bit of a credit, sometimes a little bit of a debit. I'm not a perfectionist by any means. And I think this is a trade that you can do when you want to sell a put, but you're just a little bit neutral on the stock, and you'd be a lot more comfortable if it pulled back before you got into it. And the put premium at the 40s, let's say, isn't quite enough to tickle your fancy. So this could be something to consider if you think the stock could pull back, but you still like it for the long term. And that is the strategy block for today.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block. It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, here we go, listeners. See how many we could squeeze on here. We've got folks in our chat, the pro members here. Options Queen saying she loves John Cena. Well, clearly you're not alone. A lot of people clearly were jazzed to see him back in the old squared circle this past weekend. She also says, I hope I get that same call about my used car. Yeah, I'm sure a lot of people are looking for on that same tip, Mr. Uncle Mike, what you're just talking about. Mr. Unlimited, also one of our pro members in the chat, saying, Mike, he says, he calls you Mike now. You're on a first name basis. I still call him Uncle Mike. Mike, that is happening all over town with those buybacks on lease cars. People are getting calls to trade them in for cash. There you go. Maybe someone will call me up for my my collector's item here that I have sitting in the garage down there. We got Nichols, another one of our members, wants to know. He sent this in a while ago, so don't lambaste him. We just happened to read it today. He says, do you think this new Delta variant of COVID is going to have an impact on volatility going forward? Well, witness today, Mr. Nichols. That's probably exhibit A in the argument that it may indeed be the case. Of course, as the meatball pointed out, there are other factors at play here. We've got OPEC. We have some issues out there in the financials. A bunch of things are conspiring. We got yields. A lot of things are conspiring to drag us a bit lower. But this whole Delta thing is certainly the wild card that is lurking out there. We have no idea really what impact it will have. We are starting to see not quite lockdowns, but mass mandates come back into force in certain. I think LA just re-added theirs again. So interesting stuff out there, perhaps a little bit alarming. But yeah, Nichols, it does seem like we haven't heard the last of the Delta variant and or its impact on volatility going forward. Mr. Limited saying you can always just call your dealer if you want to sell your thing. Yeah, I guess I probably could be proactive and do that. But I kind of like my now modern classic that I have lurking there in the old garage. I'm just looking here really quickly if we got some quick ones. That's too long. Spy will drop. Here we go, Mr. Uncle Mike. This is a good one for you. This comes from Junkosaurus. We can probably do this one quickly. They say, if I think Spy will drop over the next month, Does it even matter what put I buy below, below today's price? If it does go down, they all go up in cost, right? So I can just sell that put for a gain, right? So Mr. Uncle Mike, does it matter what strike he buys, sir?
As much as I'd like to imitate The Rock and say it doesn't matter, it actually really does matter. You need to really have an understanding of volatility, and that we had a really big jump in volatility today. And so the prices of puts went up fairly significantly. So I would look to buy it if you're very bearish on it. At this stage, what I'm telling people is to buy vertical put spreads. If you are looking to hedge or just be straight bearish on it, I think a vertical put spread would be a wiser decision, because that way, if time decay or volatility come, then it won't hurt your put value quite as bad. And there's ways with which you can set up to where you can get plenty of downside exposure, but I would recommend doing it more along the lines of a put spread or many put spreads as opposed to one single leg put. But of course, it just depends on your financial situation of where you're at, what makes the most sense to you. But I lean vertical right now.
And I lean towards our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block, the portion of the show where we do just that. We tell you what we're keeping an eye on until, I should say, our next episode, at least of this show. Our listeners already chiming in with some oddities to keep an eye on for Friday's oddity show, Spelunk Technology. We'll keep an eye on that one. That sounds intriguing. Let's go around the horn. Mr. Meatball, we shall start with you, sir. A lot to keep an eye on this week. What is on your radar as we head into our Thursday episode?
Well, the S&P is down 90 points. That's probably first and foremost on my radar. My VIX light is now at a yellow, which means we should expect some pretty wild moves in VIX, both up and down. But the environment we're in, with volatility, is the type that can produce a 30 VIX or higher. I don't know that I would be going all in, but at the same time, some of these names, if you do believe that the cruise liners are going to go out of business, some of the airlines, some of that long-term put premium has really gotten juiced up. It might be an interesting time to start looking at that. And then I'm watching energy, because energy, I think, is really the ugliest sector, hands down, today. And where does this bloodbath end, and when do people step in and take advantage of this? Mark, real quickly, I saw some funny paper on Friday. A customer bought, expiring August 6th, the 45 puts for 30 cents, 10,000 times. Pretty big trade. Yeah, they unloaded them today at 95 cents. That's not a bad trade.
Not bad.
For a weekend. So good job. Hats off to you, my friend.
Now, we always tell people, you watch out for the weekends these days. You don't want to go blasting like the old days. Everyone blasts away on everything going into the weekend. These days, we have very literal weekend risk. That trade is kind of an example of that. They profited off of that. So just be diligent. At least get the powder dry over the weekend at the very least. Mr. Uncle Mike, before we get to that, speaking of, you mentioned the sell-off not really ending. It seems like we are still in sell-off mode to end the show here. S&P off a little, right around 2%. Dow off about almost 2.6%. NASDAQ off about 1.35%. VIX still about the same level it was at the start of the show, right around 24.25 or so. So we haven't had the warm turning markedly in really either direction since the start of the show. Mr. Uncle Mike, what's on your radar until we can gather here together on Thursday, sir?
I'm definitely watching earnings for the week, and also watching because Mark said he's looking at the 90-point drop in the S&P. I'm only looking at an 85-point drop because it went up 5 points, because Sebastian moved the market up 5 points. He's just that much of an influence on it. So watching that, of course, and I'm continuing to watch bond yields, in that if we do get a little bit of a bid in the S&P, this could really have play a factor in the price of bonds as well.
All right, everybody. That music means we're done, at least with this one. But don't worry, you don't have to go home. We have more fun stuff in store for you. We'll put some fun live stuff in for the live listeners. We'll be back in about exactly an hour to break down the madness that is crypto out there these days. And spoiler alert, there's some stuff going on out there as well. What happened to that old saw that crypto was, inversely or just uncorrelated to the broad markets? Not so much today. Bitcoin off nearly 3%, ETH off 4.25%. Everything pretty much selling off. A lot of red on the screen, a lot of vol to be found in the crypto landscape. So we're going to have a fun show. Got a great guest joining me to help me break down all the madness of the volatility of the crypto space in about exactly an hour on the Crypto Rundown. But before we do that, let's go back around the horn. Let's go out to the land of the meatball. Mr. Meatball, sir, if folks are intrigued, they want to hit you up about any of these trades you talked about today or more, where should they go? What should they do?
Yeah, go to optionpit.com, check out our blogs. I write a blog on the VIX every day. I write a blog about overall markets almost every day. Go to optionpit.com, check out our blogs, and subscribe, and follow me on Twitter at OptionPit. Today I'm going to be profiling a really, really large July trade that went up this morning and what that means for the volatility markets.
There you go. Check it out, optionpit.com. Mr. Uncle Mike, if I want to reach out to you about Ford or buying puts or anything, where should I go? What should I do?
stcharleswealth.com, my website. Follow me on Twitter at Mike TOSAW. I'll be tweeting out a little bit more information on today's strategy block today. That'll be on my blog as well. And if you're just looking for a financial advisor who works in the option product, feel free to reach out to me.
stcharleswealth.com is the place to go. And I see you there in our live chat. Options Queen, you're excited about crypto. Yeah, I'm excited about it too. Should be fun. We'll be doing that in exactly an hour. I got to go get ready for that. So if you're listening live, you get some fun stuff. We'll be back again in an hour to talk crypto. And then tomorrow, it's Double Pro Tuesday. They're going to have Ewan Sinclair and the Spike's father, Mr. Simon Ho, joining me to break down and answer all of your freaking questions about volatility. So stay tuned for that. It's going to be a fun one. And we got Wednesday, of course, your double education Wednesday. You got a live boot camp and going to drag Brian out live for a live OPR as well. So stay tuned for that. And then we're back again on Thursday for episode 2 of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.